Warning, this video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel. I've got some interesting things I want to share with you today, some slightly different perspectives on global liquidity in general, and how we are likely to see these impact Bitcoin over the coming days and weeks. I've also got some very interesting timing analysis that I want to share with you amongst a heap of other bullishly optimistic Bitcoin things. First of all, we've been tracking the jobs revisions. Okay, yesterday they came out and lowered them by 818,000, which is the largest revision since 2009. The US unemployment rate is up to 4.3%. Remember, the Fed had a target for unemployment of 4% by the end of this year, and the 4.3% is also above the projections the Fed had for not just this year and 2025, but 2026 as well. So unemployment is getting way out of hand, as you're going to see in just a minute. 5 out of the last 6 jobs reports have now officially been revised lower, which to me has been begging the question, why do they keep lying about the jobs data? If everyone is so sure we're not going to have a recession and everyone's so sure the recession trade is crowded, why do they keep lying about the jobs data? There's also a record number of Americans working multiple jobs, and 11% of the credit card balances in the US are now delinquent, which is the highest in over a decade. So the people talking about a soft landing, no recession, liquidity's up till next year, I have been making the case that those people are likely mistaken. They are likely too bullish in their long-term perspectives. And I think a lot of people are getting distracted by the liquidity story. So we're going to go over this. Just before we do, okay, I was saying that yesterday we may have seen some volatility based on the jobs data, although I also made the case that it was likely already priced in, since if we knew about it ahead of time, I'm sure the rest of the market did as well. And I got an update on this chart for you, okay? The S&P 500 at the bottom, excluding the Magnificent Seven, has made yet another high. So breadth is widening out here. The S&P, including the Mag 7, is around 1% off of its prior all-time high. So the Camel Crew continues to remain postured long and strong, continues to remain cautiously optimistic here, although I think we are quite different to a lot of people because we're expecting a top very, very soon versus most people that seem to think liquidity is going to increase, so therefore the bull market and Bitcoin is going to continue to increase well into next year. And so this is my first point of contention. This is the first point that I wanted to illustrate and let you know why I think people are getting this thing confused. People are mistaken about this liquidity cycle. So you see people, at least from my perspective, seemingly not having eyes, okay? And I say this with no disrespect. It just very much confuses me. So here's the tweet. Global liquidity is back on the rise, which should stabilize global economies and reduce recession risks further. Okay, and then we click here. And is it just me? Do my eyes deceive me? In yellow, we've got the recessions shaded. Okay, we had a recession whilst liquidity was increasing. We had a recession, this is the GFC, 2008. Okay, liquidity was increasing the entire way up. Let me move my red pen so we can see. Okay, look, from here to here, we had a recession with liquidity increasing the entire time. And so what is it that I see that this person doesn't? Why is it that they just look at the blue line and say, yep, this is going up, so are markets? We can indeed have recessions whilst liquidity is increasing. So this is my first point of contention. Just because the global liquidity cycle is up does not necessarily mean we're not going to have a recession and a big bear market. The stock market fell over 50% during this recessionary period, with liquidity increasing the entire time. Henrik has been one of the biggest proponents of this here, and you can see, look where we are today, right at this level. Whilst everyone seems to think markets are very easy, you only need one chart. You just look at the blue line and you say liquidity is going to go up, so therefore I want to be long into next year, when this has a track record of not being a good strategy. When the macro backdrop supports liquidity cycle pushing equities and risk assets up, then I have no problem with this. But the macro backdrop today is far similar to this than it is to any of these prior occurrences. And one of the reasons I say that is because yield inversion is the biggest we've seen since 1929, which led to a depression. When I said earlier about do people not have eyes, okay, I don't understand how we're looking at this and saying, well, yeah, sure, it's going to roll over, but it'll be fine, right? As if it didn't cause recessions in all other instances, okay? As if we simply can't perceive the shaded areas on the chart that are synonymous with recessions. And I see an awful lot of comments from people on a near daily basis saying things like, Camel, everyone's calling for a recession. Camel, I think you have to be wrong because this is the most telegraphed recession of all time. But the facts are, okay, your algorithm is likely putting you in an echo chamber that makes you come to those conclusions. The people that matter, okay, those people are not calling for a recession. Only 11% of Wall Street analysts have, as a base case, a hard landing and a recession, okay? The remainder of the Wall Street analysts all have soft or no landing as their base case. Not to mention at this current moment in time, okay, again, for people that matter, and I hate to break it to you, retail, we don't matter at all. But right now, the people that do matter, the institutions, the asset managers, okay, they're all long. Look at this long exposure. They are all long, massively. And how many of them are short? Oh, that's right, absolutely none of them. So to sit here and say, well, Camel, this is the most telegraphed recession of all time. Camel, everyone can see this. I hate to break it to you. That is not the case, okay? The Wall Street, the institutions do not see the recession. Like I said, only 11% of them have a hard landing as their base case on the street. And I know that it's quite tiresome out there because there's an awful lot of content creators that have been bearish the whole way up. They missed the bulk of the moves. They flip-flop on a daily basis. They've been calling recessions since about 2010, okay, and they've never really shown up. I appreciate that. I appreciate that is super, super, super frustrating and annoying, but I just kindly ask you, don't tar me with that brush, okay? I've had a base case hypothesis and I haven't changed it for 2 years. The base case hypothesis was that we would have a blow off top, a big all-time high push, and then we would roll over and go recession, deflationary bust. So I know it's frustrating that people are out here calling recessions, but the reality is those people are going to continue to be wrong, okay? They're calling recessions at the wrong time. When they were calling for recessions, they weren't like me calling for a blow off top to new all-time highs first. They do flip-flop on a near daily basis, unlike me that doesn't, okay? So please don't tar me with that everyone's calling for a recession. This is the most telegraphed recession of all time. Like I said, the people that matter, the institutions, Wall Street, okay, they don't think a recession is coming. So we can indeed blindside the majority of market participants, the majority of the capital out there by having an early recession. And again, if you've just got eyes in your head and nowhere to look, it's kind of hard to make the case that everything is fine under the hood, okay? This is a civil unemployment rate in blue, which has crossed above its moving average, okay? Look at this. That's not nothing, okay? Why is that not nothing? Because every other time we've ever seen this, it led to a recession. Not to mention, it's confirmed with an RSI bull cross down the bottom, okay? Again, every other time this happened, we went into a recession. So sitting here and saying, maybe, okay, maybe this is the most telegraphed recession of all time, or maybe there's going to be a bull market that runs into 2026. As I have said a million times, I would love nothing more than to just stay long and buy the dips in the uptrend. That is my job as a trader, and it's so much easier to deal with than having big bear markets, violent counter-trend rallies, having to manage short positions, having to hide capital in bust. All of that is way harder to deal with than a bull market that goes up only because the liquidity cycle is up only for many, many, many months. But the reality is, underneath the hood, okay, not only is unemployment deteriorating, but they're lying to you about it and pretending like it's not as bad as it is, okay? Alarm bells should be ringing, in my humble opinion. And again, if you're familiar with the channel, I am by no means a doom poster. I am by no means the kind of person that likes to come on here and have thumbnails on fire with the world burning down and telling you that, you know, we're all going to die and all of this stuff, okay? I'm not like that at all. Like I said, I'm not like the other YouTubers, because whilst I've been calling for a recession, I have been very, very consistently long and strong across the board. I have caught the majority of this bull market, frankly, better than anyone. So again, it's not a doom post. This is me pointing at the data and saying we've had a call and we're right around that time now where we should expect things to start to hit the fan. And again, global liquidity, this is M2 at the bottom, is breaking out. This is synonymous with Bitcoin being the black hole for liquidity and moving higher. I am incredibly bullish, calling for higher numbers in risk assets, in Bitcoin, in gold and silver in the short to medium term. But make no mistake about it, if I am right about the rest of this call, if we do indeed see these blow off tops, then it is highly likely, as far as I can see, that things are going to come tumbling down in spectacular fashion. We also have more supporting data that Bitcoin could be ready to push higher in the high yield corporate bond ETF, okay, which is now looking to break out on a bullish crossover. And is this thing going to be driven by a spot bid? Because right now, in green at the hard right edge, as you can see from this chart, okay, we have a massive spot bid coming in for Bitcoin. Now, this is all occurring at the same time as we've got exchange reserves dropping to historically low levels. Institutions are buying up all of the Bitcoin that retail has panic sold out of in this neighborhood. We also have Bitcoin currently trading only marginally above the cost of production price in yellow. Now, you can see this typically works as a support band, but in times of extreme bull market price action, we do get big deviations to the upside. As it stands right now, the people that are calling for much lower numbers don't seem to realize that the cost of production has been squeezed up very, very significantly after the halving. Now, if you just quickly eyeball this chart, how much time do we spend trading below the cost of production, okay? Tiny bit here, perhaps a tiny bit in the bear market lows, perhaps a tiny bit on the way to the bear market lows, okay? But generally speaking, we don't trade below the cost of price. Why? Because miners are the price. They will defend the price and defend their business at all possible costs. So you see all these top callers and doom posters out here saying, well, Bitcoin is done, right? That was the top for the cycle. Well, if the black trades below the yellow, okay, just eyeballing this chart, how often do we do that? How often do we spend extended periods of time? It doesn't at all look likely to me. It seems much more likely that we're going to get a big deviation to the upside. What would that deviation look like? Okay, it would look much more like one of these big deviations above the cost of production price. Right now, we're all the way down at the lows, which of course is because we are sat right on top of the yellow. So does it make sense to be bearish here? I don't think it does personally. Now, stick with me because I know a bunch of people are frustrated by the amount of time we've had to spend consolidating the prior move that Bitcoin had, where it put in around 100% pump in just a matter of weeks. But if I draw your eyes to this right here, okay, the 2011 cycle, after the halving, it took just 8 weeks to make a new all-time high. But the following two cycles, okay, 2017 and 2021, it took 24 and 25 weeks respectively for Bitcoin to break to a new all-time high post-halving. So the question is, how many weeks have we spent this cycle post-halving? And the answer is 23 weeks. So if the prior two cycles are anything to go by, okay, we should be expecting a break to new high any week now. So the question is, can you hang on for just a couple more weeks? Can you tolerate this for just a couple more weeks? I've got a visual here for you in terms of the fractals. At the top, you can see the 2017 cycle, 23 weeks before we broke to all-time highs and started a big rip-roaring parabolic bull run. In 2021, as you can see, 24 weeks before we broke that all-time high and went into a big rip-roaring bull market. Right now, 23, 24 weeks, okay? Can you hang on for just a couple more weeks and get that squeeze, or are you going to continue to be bearish? That's entirely your prerogative, okay? If you think it's going lower, sell, short, do whatever you got to do. That's what makes a market. But I think right now, the majority of market participants are primed to have puked their positions, given up, and are not going to be ready to catch this explosive move. People have a very, very, very strange way of forgetting that Bitcoin can do Bitcoin things. It spends a great deal of its time doing nothing, consolidating like this, only to melt faces in a few weeks. And then after it's melted faces, it spends an awful lot of time doing absolutely nothing again. And to really put a timing window perspective on this, okay, great post here from Andrew. We've got bullish developments coming out of this potential weekly cycle low. At the prior weekly cycle low, the top was only 35 days away. So take a look at this, okay? Prior weekly cycle low, we made this bull flag, we started to push off. This is day 16 here. And just 35 days later, we had doubled from the lows, and that was the top for this current leg out of the weekly cycle low. Where are we today? If that really is a weekly cycle low, we are currently on day 16, which tells us we might just be about 35 days away from reaching around 100K, which would be approximately a doubling from the low. This is what I mean by people forget how Bitcoin can do Bitcoin things. The only reason you come to this market in the first place is because you want outsized returns and outsized volatility. And then the moment you get in and you make a few wrong trades, or your timing is slightly off, or you think that, oh, I should have had a Lambo by now and a harem of women. But don't forget, okay, Bitcoin can and will do Bitcoin things. This was a terribly boring time. All of a sudden, 35 days later, we've doubled off the lows. This has been an incredibly boring time, but don't sit there and say to yourself, there's no way this thing can double off the lows in just 35 days. It absolutely can. And of course, that would put in a significant, at least a local top right around the time we expect to see the top come in for the stock market. Okay, right in line with all the 2007, 2008 parallels I've been showing of late. Somebody pointed out to me that back then as well was even more similar because they had the biggest downward revision in jobs right around the time of the rate cut, just like we've had today. So history is repeating to the tick. And once again, I'm here to ask you just to be open to all possible outcomes, okay? Like I said, if you sold out of the market, that's fine. I did some damage control in here too, having been long the entire way up. I've recently re-entered. I'm not saying that's the correct call, okay? Time will tell as always. I've got my stop. I'll let the stop do the worrying. Size my trades appropriately as always. But I am more than prepared to see this as well as this. Whereas I think an awful lot of people have just decided that the only possible thing that can happen for Bitcoin from here is this. And how would you feel if you bought somewhere in this neighborhood, sold here only to watch the thing double in 35 days, okay? Be prepared for all possible outcomes. And don't forget that Bitcoin can and will do Bitcoin things. There's a reason we say that almost every day on this channel. In fact, probably multiple times a day on this channel. It's because momentum, when it returns, can return incredibly quickly. Notice how the TSI setup and the MACD are also very similar at the hard right edge today, okay? So again, keep an open mind. If that is an early weekly cycle low, then this is the moment that we are in as it stands. One more time, as Andrew points out so well here, day 16, okay, just 35 days to a top, which was a doubling from the lows. Day 16, okay, potentially just 35 days away from seeing a doubling from the lows, which has put us right around 100K Bitcoin. And another sign that I think points in our favor for seeing tops come in this year as opposed to a rip-roaring bull market that continues into next year and beyond is silver and gold always know something, okay? When these rate cuts are due to show up, let's get a magnifying glass, okay? Down here, notice the rate cuts. We see the rate cuts. What happens to silver? It goes up 412%. Then we also get more rate cuts into the GFC. What happens to silver? Goes up over 400%. Back in the C19 era, we get rates slashed, and of course the precious metals respond positively as they often do. And at the hard right edge, we know we're about to get rate cuts in September. What does that suggest is going to happen to the precious metals markets? It suggests a big rip-roaring rally that averages more than 300% is probably on the cards for silver. Gold is already breaking out to all-time highs. Okay, if we pull up a gold chart, this is an all-time high for gold. $2,500 an ounce. Gold knows something. Yes, there's probably a daily cycle low coming up, but for me, that's an opportunity to add and continue to build exposure out, particularly in the members section. As I was saying for Bitcoin, okay, we are long, we are strong, and we are seeing what the market can give from here. If indeed we are similar to where we were back here at the ICL, then we may well have a big rip-roaring doubling, as I've said a million times already. Be open to it, okay? Be prepared for all outcomes. Look at the dollar as well, on its way to potentially finding a 3-year cycle low. Okay, this is the fuel to see the blow off top come to fruition. The crypto related equities are doing pretty well. I'm going to be putting out some more content for members on Saturday about those. And we also have the VIX on its way down to a cycle low. Okay, first week of September, this is going to be a massive opportunity for people to hedge risk. I'm going to be not only hedging risk, well, I'm not going to be hedging risk because I'm a nimble enough trader to exit the markets and flip short. But for me, this is going to be a massive, massive opportunity. I really do think we're going to see a new all-time high. And the reason I'm sharing this with everyone is because if you are at risk, okay, if you want to be able to hedge your position, then this is one way of doing it. You know, if we really are going to have a big recession, I don't want to just be in the camp of people that says, well, only the members get to benefit, okay? I will show this trade publicly, make sure everyone's aware of one way to possibly hedge the risk. I get a lot of questions from people saying, Camel, how can I trade the VIX? What account do you use? Look, I can't tell you that, okay? It's a completely individual circumstance. Many of you don't even live in the UK and are asking me, oh, what's the best account to use in the USA or in Canada? I have no idea, okay? I live in the UK, so I don't know. Please do your own research. Please understand the tax implications, the risks of the instrument and the fees, okay? Understand all of that. Figure out what's right for you. And you've got somewhere in the neighborhood of a week or so to figure that out if you want to take advantage of the ability to hedge at the lows for the VIX, which is something I personally do. So you've got about a week to research it. Go and figure that out if that is something you're interested in. I will continue to update when there is something to say about that. In terms of the stock market, okay, we keep ripping higher. So happy days there. Dips are for buying as far as I'm concerned. We've got our exposure via the NASDAQ. As you can see, let me pull this fractal out the way. Okay, we got our exposure, and if the fractal was anything to go by, the top might be in around the 3rd week of October. We've also got breakout retest resumption working out for the Dow Jones as well, so happy days there. And we still have our Russell 2K exposure looking for a big push to the upside over the next couple of months. So overall, as I was saying earlier, I would love nothing more for this bull run to continue well into next year. Under the hood, I still maintain that the signs are there, that there's no chance that's going to happen. As ever, I'm open to pivoting if I am invalidated. But as it stands, I think this is the final upside squeeze. I think Bitcoin is about to take part, as I showed you. And I think most people are going to have their minds blown when they see Bitcoin do Bitcoin things once more, having spent all of the prior few months bear posting, arguing with other people online and on comment sections and on Twitter. Okay, I think we've flushed enough of the sentiment out to see one of these big 35-day rips up to 100k plus, only to leave the rest of the market scratching their head, looking for explanations. As ever, we'll keep taking it one day at a time. We'll keep being open to all possible outcomes. I'm your boy Camel. I hope you found value here today. And until next time, take care from me. All the best. Cheers. Bye.